My name is Grace Wagner, and I am a health insurance agent here at Hitchings. I've been with the agency since 2020, and I'd like to talk to you today about the 4 different stages of prescription drug plans. So the first stage of a prescription drug plan is going to be your deductible stage. Typically, if you take more generic drugs, more inexpensive drugs, you may not even leave this phase, but if you take some more specialty drugs or higher cost prescriptions, there's a chance that you may hit your deductible. Typically, those range between $400 and $500 depending on your plan. Granted, the plans vary based on your area, so keep that in mind, but that's typically what we see. When you do hit your deductible, you would then go into the second phase, which is your initial coverage phase. This phase essentially allows you to keep paying those set copays at the pharmacy for your prescriptions until you hit an out-of-pocket cost at $4,660 for the year. If you do hit that amount, you would then go into the donut hole phase, which is probably the most common phase that a lot of people are curious about. The donut hole phase is where you pay 25% of the cost of your prescription drugs until you hit an amount of $7,400. Granted, you are starting that cost from that $4,660 from your initial coverage phase, so you would start there and pay until you hit that $7,400. If you do hit that amount, you would then go into the 4th stage, which is the catastrophic coverage phase. This phase means that you are going to pay just about 5% of the cost of your prescription drugs, and it's typically your most inexpensive phase. So if you do hit that phase, you would stay in it until the end of the year or whenever your policy renews.